Well, good morning, everyone. Welcome to our Tuesday morning session. It is Tuesday, isn't it? Yes, it's Tuesday. I know, it was only Monday yesterday. I don't know what it is with me lately in dates. I can't seem to get any of my dates right. So let's take a look here. Huge session in the overnight. The market, this is the NASDAQ on the Eagle. They left off right around here, around 44, 45, give or take, and look at where they've opened. Way down here, about, good 30, 40 points lower. So, as I've mentioned before, the big deal with these big gaps is it's difficult to tell sometimes whether or not the market is going to try to recover that gap, or sometimes when the gap is really big, the market treats it as an acceleration gap and just keeps on going in that direction. So right now we don't really have a clear indication which way that's going to go. But I think it's clear that we're looking at a bearish day today, at least overall. So working on a possible trend change signal here in the Falcon. And we're starting to get our first micro-macro cross signal on the Hawk also. Oops, there goes that first micro-macro cross. Let me see if I can get a Falcon signal in. The problem with the Falcon signal, of course, is the range. We've got a huge range to cover here. And you know what? I'm going to try to put a runner in today. I know I said I was going to be looking at doing more all-in, all-out type trades. But let's try a runner right now. Now, the deal with the Falcon signal, of course, is we haven't had our test to the extreme. So we've had our signal print here. I'm going to go off of the earlier signal. And this is early. You know, the market just opened a few moments ago, so this is a rather aggressive attempt. We'll see whether or not there's some breakdown here now. Mike is asking, Eric, can you please mention again your profit target for the NASDAQ for each bird and the break-even number you set to appear on the charts? Sure. The profit targets are the same regardless of the market. We have dollar amount profit targets, not tick amount. So in other words, you're going to adjust the tick amount based on the value of the market you're trading. So we have $50 targets for the Hawk, $100 targets for the Falcon and the Raptor, and $200 targets for the Eagle. So because the NASDAQ is a $5 instrument, my $50 target would be 10 ticks, my $100 target would be 20 ticks, and my $200 target would be 40 ticks. If I were trading a market like the E-mini or anything that trades at $12.50 a tick, my profit target for my $50 target would be 4 ticks, 8 ticks for my $100 target, and 16 ticks for my $200 target. So that's how we make the adjustment. I'm sorry, I'm stalling a little bit here. Something's happened to the band on my Raptor. I don't know what's going on here. What happened to my band? Raptor Cloud, there you are. Why are you not applying? Let's see if this makes a difference. Oops, hopefully I didn't break it. The break-even stops for my hawk, I like to have them a little bit early. Okay, that's better. Oh, I thought I broke something there for a second. My break-even stops will be, okay, no, this is for the NASDAQ. I'm looking to get, or actually I suppose I could give you percentage values. I'm looking to get 80% of the way to the target. So because I have a 10-tick target on the hawk, I have an 8-tick break even. The Falcon, same thing. I'm about 70 to 80% to target. And it's actually, because it's a 20-tick target, I've just gone with the default 15-tick break even. And likewise for the Eagle. The Eagle, I also have a 15-tick break even, which is just the default. Now, obviously, if you're trading a market on the tool like the Falcon, and you don't have a 20-tick target, well, you can't use a 15-tick break even, can you? Okay, so you see how the market's made a more determined swing. I can at least bring my stop down to here now. If it fails at this point and starts trading above here, then it's probably time to go. In fact, I should be using a more aggressive strategy right now, perhaps like the bar high low, so that if this market continues to reverse, then it's probably a good time to get out. All right, so that's all I'm going to give it right here. It may prove to be a little bit too early, but we'll see. I'm going to press them a little bit at this point. The sellers have recommitted here, and we'll see now whether or not they can overwhelm the buyers, which are right down here. See how the buyers bought here and here and here? They're trying to buy here. The sellers sold here and here and here, and now they're trying to sell here. So this bar should set the tone. If it trades higher, well, it's probably a good time for me to get out. If it trades lower, well, then hopefully we will see it continue lower. Come on, you guys, get down there. Real big tug of war. Ooh. Thanks, Jim. Jim says the ticks are negative 1,000, which can be huge, but it can also be bullish. When the ticks get very, very lopsided, like negative 1,000, they will sometimes fade, or positive 1,000, they will sometimes fade to the downside. Come on, you guys. You're so close to my profit target. Just give it to me. You know you want to. Oh, look at that. They're kissing. Oh, whew. I didn't think they were going to give it to me there for a second. All right, so we're at break even at the moment. On the remainder of our position, we took profit on one of our contracts. And we'll see whether or not they're going to allow us to run this down a little bit. Possibly to these lows here. These would have been the overnight lows. more aggressive. Bar high low, I'm going to give them 2 bars back and just a 2-tick offset. Try to keep some of that open profit, especially as we get to this area here where we might encounter another bounce of sorts. All right, I'm sure we had comparable signals across the board here. Oh, we did too, and I'm sorry I missed this one. I saw this one printing while I was going over some of the materials. We had the with trend signal here on the eagle. The thing that was enticing about this one is it looked very much like a bear type flag, right? Where the market comes down, does a little bit of a retracement, came out of here and printed a with trend signal. Let's see if we're to our profit objective yet. Almost. Almost got down there to our profit target. And the hawk, of course, the hawk would have given us ample opportunities by now. So first micro macro cross here early. Oh, actually a macro pullback as well. Look at that. 1, 2, 3, 4 arrow consolidation. The 4 arrow consolidation is the only signal I will take off of a yellow bar. First micro macro cross again, and look at that go. My goodness, within the first 5 minutes, we had 4 solid signals on the hawk. All right, looks like today could be a runner day, so we'll throw a runner in there. Although here too, I would have done better had I been all in, all out on all 4. You know what, maybe we'll just stay all in, all out. How did I do here with my Falcon? Did I do a little better? Oh, $15 better than going all in, all out. It's always a tough decision. And I suppose at the end of the day, you have to go with what makes you most comfortable. Oops, coming back here with another with trend signal now. Not quite a trend line touch, probably close enough to be one. We'll see whether or not it gives us a little bit of a bounce here and actually gets back to touch that trend line. Our eagle has hit its high probability target. So we might see some sort of reaction out of that. Brian says he's interested to see how I'm using the Geiger counter. I use the Geiger counter sometimes when I'm in a trade, well, especially in a Raptor trade, because I don't have to go back and forth between the charts. I could put the Geiger counter on each of the markets that I'm trading. Well, here, we're going to print a signal here in a moment, and why don't I'll just sell market if the signal engages. Okay, so what I did was, rather than manually put my trade on, I just used the buy-sell market buttons, which is a very easy way to trade when you're using the Trailblazer. Okay, once I'm in a trade, I can use the Geiger counter to see what the market sentiment is like. So right now it's still very bearish. My needle is still red, which is nice. Okay, now things are getting a little bit neutral, which is nothing to panic about. If this needle started to turn very green, that would tell me that it's probably shifting in market bias. And so I would need to consider maybe punching out with profit, maybe tightening up my stops a little bit more. It's also a good validation tool when you're considering a signal. So when this signal was printing, our trade indicator, which is this little envelope that you see around the outside of the bar, was red, suggesting that short term the bias is bearish. Right now it's green, which is nothing to panic about. It's just kind of a short term average of market sentiment. You can see our needle still very neutral. Our dial meter flip-flopping back and forth. Okay, strong red, strong green there for a moment, but still primarily the histogram is red. The average is bearish. So it's looking as though this trade should work out. You see that the needle will flip-flop back and forth a little, but if it gets decidedly green or stronger here, you see how we're drifting more into the selling portion of the histogram. That tells me that even though this bar is trying to rally, it will probably fail and head lower. So the Geiger counter, you can almost think of it like keeping your finger on the pulse of the market. Oh, let's see if they're going to get down there, if they're going to tap me at break even. Oh, no, they took me at break even. But if I wasn't at break even yet, I would probably have just let the stop manage. Let's see now whether or not this signal will actually fail, whether the buyers are going to give it up here soon. Oh, we're getting a little bit stronger. Oh, and you see now the needle is turning green. So this would be a little bit more bullish. I would be considering bringing my stops in now, or perhaps punching out with profit. But that's how I like to use the Geiger counter. Kind of give me a look at the pressures going on behind the market, especially if I'm in a trade or I'm considering a signal. Right, like now we're getting a macro pullback signal. It's still a strong signal, right? This is a signal I would consider taking in spite of the big downtrend. If I had my Geiger counter on here, you can see that we just made a big loop through the buy side. So what does that do for me? Well, maybe I'm going to dial down the risk amount. We haven't had a test at the extreme here yet. Maybe I'm going to try to run a deeper stop. Oops, come back here a little bit. You know, maybe I'm going to try to do things like that to try to protect myself because, you know, the Geiger counter was getting a little bit bullish there. These are the kinds of trades where you need to be a little bit more cautious. Yes, the trend is down. There's been a huge move lower, however. Macro pullback, yes. No test of the extreme yet, yes. So it's favorable. It's looking like the market should try to go lower. However, you know, there is a very real possibility there's going to be some profit taking along here. Okay, so now the Geiger counter does seem to give you like advanced information. So you're going to see these things kind of prelude what's happening on the charts. So we had that little rise up there. A few moments later, we're getting a rise in prices. Now we're getting a dip. So we should see prices tail off here in a few moments. Now they're getting a little bit choppy again. Brian is asking, can you put it on the Falcon? You can put it on any chart you want, obviously. Because I've got different tools on different birds, I tend to only put one tool on each bird because, otherwise things get a little bit crowded. Like if I put my Day Ranger on here also, where'd you go, Day Ranger? Oh, there, Trade Forecaster, Day Ranger. Now I know there's people who do this, and I'm not knocking it. Oh, see, I need to readjust this. Anyways, the thing is, I'd rather not have everything on one chart. I find it a little distracting to put everything on one. Where'd you go? There it is. Okay, enough messing around. Oops. Oh boy, I'm really making a mess of things this morning. NQ, where'd you go? There. All right, so a little bit of a retracement here. Back into the hard edge. Wasn't a real surprise, right? Because as often happens when we hit our high probability targets, we do see the market react somewhat. Got a little bit past our target there, but still. Oh, here we are. We're getting a green bar sell, which is a good signal for the eagle. Now, here too, we should be seeing a test of the extreme. This is all a little bit early, right? And we're seeing a little bit of a retracement here. Perhaps the market's starting to shallow out somewhat. When we get these kinds of things, we can connect the dots of our lows and we can see that maybe the market is starting to get a little bit shallow. If nothing else, the legs are getting a little bit shorter than at least what they were in the overnight. Okay, it looks like we had a macro pullback signal here, which should not have failed, but it did fail. We had the chance here off the green bar sell, which failed. Well, I didn't get a chance to manage this trade. I would have tried to look for a place to bring my stop down in showing that the sellers were actually trying to regain the market. And you can see we came back with the first micro-macro cross. So a lot of, it appears to be some profit taking maybe after that initial run down. Here's our macro pullback. This would be a test of the extreme, in my opinion. We'll see whether or not this market folds over now and heads lower. Or if it's going to build into a 4-arrow consolidation. Michelle says, the Falcon is working on a trend change signal in the NQ. Let's go take a look. It's possible, yeah. The green line, the trend line change here kind of spoiled it, but when Michelle wrote it, this is what we were looking at. Possible trend change signal back with the trend. That would have been very enticing. And now we're getting this signal. Now it is a little bit of a spoiler. You could treat this as an early trend change signal. The early trend change signal has the down, up, down pattern preceding it, right? So, I was just going to try to throw an order in there. Well, let's take it below the low of the current bar. We could, actually what we're going to do, or what I'm going to do, is I'm going to cover it above that swing high, because that is the obvious place to tell me that if this market is not truly recovering the downtrend, then this is the place where it's going to fail, right? Above that swing high. Again, with the early trend change signals, they're much more aggressive, and you need to manage your stops a little bit differently, because if this develops into a proper trend change signal, we're going to have the down portion. There will be another up portion through here. So we can't necessarily manage our trade very tight before we try to get to that portion. There is always a chance that the market will move all the way down here, hit our profit objective before giving us that second up portion. We can hope. Okay, so you can see a little bit late on the signal here. The signal actually printed back here. Now let's see whether or not we're going to get that reaction and a proper trend change signal versus the early trend change signal. Okay, let's see them take out some of the buyers now. That's good. Nice little progression. Might be working on that reaction that I was referring to. Okay, so here they come. Now we'll see if this develops into a proper trend change signal. So obvious support down here, obvious resistance up here, minor support here and here, minor resistance here. Now we'll see who's going to win. Okay, so now we're working on the proper trend change signal as opposed to the early trend change signal. Get down there, come on. I could roll my stop above this high now because that's shown me where the sellers have decided to dig in. So if the buyers start to fight the market back, this is where they're going to fight it back. And if the sellers fail here, well, then it's probably a good time to go. That bar is starting to take a little bit long, starting to annoy me a little. Come on, get down there just a little bit. I'm going to snap you to break even. There we go. Get down there. See how our time and sales have narrowed somewhat also. Get down there. There you go. There you go. All right. So just for curiosity, let's see how the proper trend change signal would work out, whether or not we're going to find that profit target. The early trend change signal, a little riskier in that we don't have quite as much structure to the trade. We rely very much on the formation itself, that we get that swing happening. Right, the test of the extreme, the market looking like it's going to head lower. All right. Well, you can see our Geiger counter getting a little bit more bullish all of a sudden. What's with that? Brian is asking, could you please explain a proper trend change signal? Absolutely, Brian. It's one of our standard signals on the Falcon. The proper trend change signal occurs when you have the market trade either higher or lower. Here, we can do it both ways here. So here the market trades up, and this is the portion that changes the trend line color from green to red. So here's the portion that changes the trend line color from red to green. Then we have the reactionary move against that trend change, and then we have the market come back with the trend change. The signal will almost always print near this little swing point, right? So here's the swing point up here. The signal prints very close to that. Here's the swing point down here. The signal prints close to that. The proper trend change signal has the leg that moves the trend line color. The early trend change signal only has the formation that we're looking for. The signal still prints near the swing, but the trend line only comes into sync as the signal is printing. It's still a reasonably strong signal. It's just that you're taking it early. Like we took this one here, I believe it was this one, as our early trend change signal because we had this down, up, down pattern. Here, let me clean this up. This is getting a little confusing. So when this signal printed here, we had this down, up, down pattern. And I think I even drew a trend line somewhere through here, something like that. So I was fairly confident that the market was going to try to head lower. Had you not taken the early trend change signal, you still had a proper trend change signal a few bars later. So here's the portion that has changed the trend line color. There's the reaction. Here is your signal now with trend. So you can see the buyers were only able to give you a single bar reaction before the sellers took it back. This is now our proper trend change signal. You could set it up and sell it accordingly. Right? And down you go. So here too, we're getting a little bit of an early trend change signal because our trend line went out of sync and now it's come back into sync, but we're still maintaining that structure, a down, up, down structure. Now this one is not as strong because we might also be getting an early trend change signal to the upside. Do you see that? You see we have this, this, and now they're fighting it this way. So the early trend change signal has its place, but if you're looking for the higher probability signal, we're going to be looking for the proper trend change signal. Now notice this is like a mini trend change signal. Our trend line has gone from green to red. Here's the part. These three bars have changed the trend line color. Here's the counter move now on the part of the buyers. If we come back with a sell signal now, that will be a little easier to stomach. Okay, so now here's the move to the upside. Trend line has changed color. We're going to look for a reactionary move on the part of the sellers. It should be showing up soon because they fought it down from here. The buyers tripped them up here, so we should be seeing the sellers step up shortly. There they go. They're trying to push it down a little. Oh, are the buyers really that strong? Come on. So if all goes as planned, we should see a move here, get us somewhere close to this trend line, and then the buyers come back, if in fact they are controlling the market, and produce a signal somewhere around there. Of course, if the buyers are especially strong, well, they're just going to rally the market without us. You can see our Geiger counter quite bullish at the moment. The programmer says that when the Geiger counter gets gets these spikes in the histogram, that is an indication that the buyers or sellers are running stops. Neil's having a little problem with his Trailblazer. He says it keeps cutting out, but it fixes when you remove it and reapply it. Okay, it sounds like the file not the Trailblazer file, but your workspace file might be corrupted. Now, this is news to me, and it might be news to many of you. You know, when you go to close your NinjaTrader and you get the prompt, do you want to save the workspace? This is not a Word document. I thought it was a good idea to save my workspace. Ben says no. Only save your workspace if you've made a significant change to your workspace, like the contract month you are trading or some sort of settings that you have changed. Otherwise, click no. So what you may have to do, Neil, is you may have to rebuild your workspace. In other words, start from scratch. Open up a new workspace, put on your chart, and add your Geiger counter or Trailblazer or whatever it is you're using, and then go with that. Save that, and hopefully that will not be an issue. I had a similar problem where something was not working right, and Ben looked at whatever the log or whatever the thing is called. You can tell I'm very tech savvy. And he says, oh yeah, he says your file is corrupted, your workspace is corrupted. You need to rebuild it. Which is no fun, but here's a little tip. I keep in my workspace, I have a backup. So I have a copy. So if my main workspace becomes corrupted, at least I have my backup that I can go to instead of having to rebuild everything. So when you, well, I won't do it now because it'll mess everything up. But when you go to close it, unless you've made a significant change to your workspace, don't save it. All right, real battle going on here right now. Look at this. The buyers digging in here, the sellers digging in here. Sellers currently having control of the market. We're against the ATR. I'm going to use Mike Filigera's little trick here and let the ATR flip, which it did. And let's see, I'll cover it above there. Oh, Neil says I never save it. Oh, well, that's odd. When in doubt, email Ben. His email is support@indicatorwarehouse.com. He's a pretty smart cookie. He can usually make things right. All right, green bar sell. The market is in sync now, just waiting to see whether or not it's going to engage the order. This is one of our higher probability signals on the eagle. I am a little concerned about the seesaw action that we have going on. The buyers really digging in here around 43.75. That is not to say there is not ample room for the market to head lower. All right, back to this trend change signal that we were watching. So we had the up portion, here was the down portion. We needed to see the up portion come back, and that would have given us a reliable buy signal. Oh, they're working on it. They're working on it. They managed to flip that trend line around. Oh, it's all on this bar. Look at that. Goes a tick lower, the trend line goes red. Goes a tick higher, the trend line goes green. If the trend line goes green and we print a buy signal, that will also be our late filter entry signal, which is a very reliable signal for us. Remember, the key component to the late filter entry signal is that the trend line does not change color, but the filter does. So at the moment we don't have one of those, but we'll see. We'll see how this prints. Okay, Mark asks a question related here to the Geiger counter. He says, Eric, who do you get your data from? I'm still trying to wrap my mind around the whole CME data change with tick data and CQG continuum and so on. Yes, if you haven't heard, there's going to be a change in the near future of how the tick data comes out of the CME. I'm not on top of it all either, probably because there's nothing I can do about it. But anyways, Mark says, our Geiger counters don't seem to be in sync. Who do you get your data through? I get my data through Kinetic. And I don't know if the programmers have been keeping you in the loop on that thread that they started, Mark, but they said even if our data is compiled slightly differently, they should still sync up after a little while. Yeah, Mark says our charts look similar, just not the Geiger counters. Isn't that odd? Okay, possible rule of three scenario on the Eagle now. Now the rule of three develops when we get three signals counter trend, so they're against the band. This might lead to a rally, still against the ATR. I'll wait for the ATR to flip over. The rule of three must be preceded by a test of the extreme. If it is not a rule of three. That is the clincher. So we always have a little bit of price action that we look to confirm what's happening when the signal generates. That's why sometimes a rule of three may only be a rule of two, or sometimes it will be a rule of 4 or 5. Yeah, Jim says the NQ is following a nice little trend line here, which they are. Okay, now we're getting a with trend signal here on the Eagle. So we're getting the warning dot. There's the signal printing. Ooh, you stinkers. Come back here. So this is our with trend signal, the green bar sell. The market's still kind of choppy. Yeah, like Joe says, the market doesn't want to make up its mind. No, it sure doesn't. I think everybody expects the NQ to head lower, but they're just not giving it up. Ay, ay, ay. Just the choppiness. I thought we were going to get out of this nonsense. You see here on our hawk, all these yellow bar clusters. That's a no-no. We got a trading range now. And really, until we get outside of this range, it is going to be tough trading. All right, well, here comes a with trend signal, or a proper trend change signal. So here's the down portion, trend line changed color. Here's the up portion. We're still within this trading range, kind of sandwiched nicely between our two support lines here. If we come back with a sell signal here, that would be very welcomed. There we go. Now, again, this is a situation where the market is in a range. You may consider dialing down your risk amount, certainly covering the trade a little higher, taking certain steps to try to protect yourself. I am getting a little bit aggressive here. The Falcon does not necessarily need to print a signal off of the second dot. Sometimes you will see the Falcon print a couple of warning dots before it prints a signal like it did here. So warning dot signal. I'm getting a little bit aggressive here. Okay, warning dot. If this one comes down, we should see a signal. But I'm not liking the green bar with the red warning dot. Yeah, Jim says we're right in the middle of that 10 a.m. range, that first hour. Let's take a look here. Yes, we are too. Look at that. Almost smack dab in the middle of it. So here's the high of the session, or the first hour session. Here's the low of the first hour. Now, this was and Jim, you can correct me if I'm wrong, this was a yellow bar. No, it wasn't, because the band, I think, was the wrong way. A yellow bar sell, short long. You phrase it better than I do. We're getting a sell signal that comes back with a blue bar, a little bit of a rally to the upside. Michelle says, can we take a look at the Falcon on crude oil? Absolutely, Michelle. Yes, we had a little bit of a trend change signal here to the upside. Now, crude is a little bit, crude's tricky all the time, but it's a little bit tricky here because it's hard to say which way this market wants to trend from here, doesn't it? We've got the larger uptrend, but then we have a major retracement off of a very nice test of the extreme. So it's hard to say right now, is the market trying to recover the uptrend, or is this merely a bear flag and we're going to see the market retreat. So I think what Michelle is asking me is, would I have considered this buy signal right here? Well, yes, I would, Michelle. The problem with this, because I'm not entirely sure whether the market is recovering the larger uptrend or whether this is merely a pullback in the downtrend, is I got to try to cover this trade very deep. I got to try to cover it all the way down here. And now I'm going to be looking for the sellers, or pardon me, for the buyers to come back and say, okay, it's safe for you to now roll your stops because we really do have this market under control. So somewhere here, the market is going to post a few bars higher, and then that will be my cue. Let's pretend here that the market's going to hold here, then we get a bar up. That's my cue to roll my stops. And let's say I get another bar up, I roll my stops again. If I get another bar up, I roll my stops again. Because if the sellers are going to recover the market, they might let you get about that far, and then they're going to start knocking the market down again, right? And that time they'll probably either take total control and drive the market down, or the market's just going to end up going sideways, where the buyers will buy it back a little, sellers will knock it down, buyers will come back, and it'll just be a real mess, right? It'll be one of those. So if you happen to be long from here, I think the key to this trade right now is to keep your stop out of harm's way until you can see where the buyers are prepared to buy the market from. Certainly if it fades all the way down here and takes you out, well, that would be very unfortunate. Also very unlikely. Why do I say that? Well, look at where the market rallied from, right? A huge, huge rally. The buyers are not going to walk away from that. They already showed signs of digging in around 59.50. Looks like the sellers are holding around 60.10. So now we need to see where the buyers are going to once again become more aggressive. They're going to have to tip their hand soon. It's kind of one of these unwritten rules that if a market like this is changing direction, the people who bought early are not going to allow the latecomers to buy at the same price that they bought. So it's very unlikely it will get down to 59.50. Could take a few minutes here, but we'll see whether or not they can put something together. All right, so here come the buyers. They're going to give me one bar. Now, it's always tricky when you get just one bar, right? Do I roll after one bar? I like to wait for two. Ideally, I'd like to see two. The problem is that sometimes you get this kind of scenario right here, where you get one bar in your favor, and then they come right back and smack you with the other bar. Good news is that if I see the green bar go and then it comes back with a red bar, I still have time to roll my stop underneath the green bar or even just punch out because if I get one red bar, I'm probably going to get two. And that second one is going to take me out anyway. And if that one doesn't, it may end up going lower still. Of course, you never know for sure, right? That's the fun part. Oh, I'm liking the shorthand, Jim. Jim says, darn, I missed the yellow bar, yellow bar sell by. Let's take a look here. Is that on the NQ you're watching, Jim, or was that on the YM? Oh, on the YM. Let's bring the YM over here. Okay, so here's the yellow bar. I'm thinking this is the one that Jim's looking at here. Yellow bar comes with a sell signal that comes right back with a buy. So Jim's liking to buy these failures. Okay, let's get back here to the action in the crude oil market, and we'll see whether or not we can't manage this trade. Oh, now these are really tough if we just get these bars with these wicks. That doesn't give us any opportunity to roll our stop. Come on, buyers, you got to give me one more chance. That may have been our only opportunity to roll our stop. Terrible. Jim says that on the Raptor, those signal failures, 3 out of 4 of them work. Yeah, so here was a sell signal, there was the failure. Sell signal, there's the failure. Sell signal, there's the failure. Wow. All right, here comes crude oil once again. Now the buyers are getting a little bit more serious because it's back down to a rather significant low. Well, all right. We'll see what else is going on, but I'm sure you get the idea here what we're looking at. We're looking for the buyers to come in and tell us that it's time to start getting more aggressive with our stop. And we can revisit that in a little bit. Okay, so now we're challenging the top end of this trading range. We have broken out a little bit. Looks like all the action came early again. It looks like you had to get in there, get your trades on, and get out. I think we had, looks like our Eagle trade, we had our Eagle trade going on here. So we were looking, we sold somewhere down around here, and I think we initially covered up here. Now this is a situation where we would also be watching for the market to recover, right? Recover the downtrend, which would occur right here. This would be our cue to start rolling in our stops. And then the market came right back and would have stopped us out. This is also that rule of 3 scenario. And now I think we have our with trend signal, or yeah, our with trend signal printed right here. Whenever the market begins consolidating like this, you know, trading punches, higher lows, lower highs, things are going to get difficult, right? When the market gives us, you know, this type of deal, it's a little easier to trade. Pay attention to the size of your legs. When you notice your legs getting shorter, you should anticipate less follow through. Perhaps the market is going to reverse, those types of things. Also be aware that not every leg can be that big. Even our trade forecaster is telling us that market conditions are changing somewhat. We're in scalp mode and moving into swing mode in a few minutes time. So the market trying to get some sort of footing. Okay, I'm just gonna go grab a drink and I will be right back, and then I'll answer Neil's question about setting up the break even. Back in a moment. Okay, wow, looks like they're put in quite the rally. Looks like they are going to try to trade into that opening gap after all. Okay, so Neil is asking, can you please go over how you set up the break-even settings? Absolutely, Neil. What you want to do is you want to go to your strategies window, because this is part of your trade manager or trailblazer, whatever the case may be. And then you want to disable your tool, and that will allow you to make changes to it. Near the top, you're going to see your auto break-even parameters. You need to make sure that your auto break-even is set to true. Yours is probably set to false. And then you can set your break-even trigger and how much you would like the break-even offset. So 1 tick, 2 ticks, 5 ticks, whatever. Then when the settings are to your liking, you go back down here to your Enable tab, change that back to true, apply it, and you're done. Well, that was a substantial rally once they got outside of this trading zone. Wow, and they're moving fast too. I was looking at this macro pullback signal. I looked away for a moment and boom, it's gone. Well, we had a couple signals here on the Falcon also, a nice little trend line touch signal here where it comes back in, touches the trend line. This is almost a textbook trend change signal right here. We get our up, down, up pattern, comes in, touches the trend line, signal prints near the swing. Very nice. Haven't really been following soybeans this morning very much, but we did get a decent signal out of the bean market. Shortly after the open, we had our first micro-macro cross signal, a little bit of a progression out of there. Yesterday, relatively quiet. Not much going on in beans yesterday. Even Friday was a little bit quiet. Thursday, a little bit better. We did have some follow through there. The NQ amazes me. It amazes me. I was reading all kinds of commentary and such this morning. Everybody, myself included, was looking for the NQ to make a rather substantial move lower today. And here they are putting in yet another strong rally. Remarkable. Okay, so now our Geiger counter is pretty much full on green. Notice our histogram, very lopsided. Let's see whether or not this does result in some stop running and the market reversing. That's what the programmer suggested. Well, they made a little bit of a pullback move, but nothing substantial, not yet anyway. Now they're slowing down again. Well, we saw a good move higher and a decent move lower, or vice versa, decent move lower, good move higher. And now they're happy to consolidate some more. I think sometimes half the challenge to trading is just letting everything shake out. What's interesting too is the timing of today's rally. It pretty much coincides with the 10:30 reversal, 7:30 my time. If there's been a dominant trend in the market, and I think we could say that dominant trend was down, the market will have a tendency to reverse against the dominant trend at around 10:30. And that's exactly what it did, almost right on the mark too. It started reversing. We're working on a second macro pullback here. It's drifting into a yellow bar, which is going to negate it for me. However, we know there's typically only two macro pullbacks within a trend. Let's get back here to crude oil for a second. Okay, so we were looking at buying crude around here, covering down here. The market made a rather substantial swing. Now here come the buyers. Now the buyers definitely showing control. So this would be the point where you want to start rolling your stop. At the very least, you want to take it from down here to below this swing low right here. Depending how aggressive you want to be on it, you can roll it bar for bar. The objective at this stage is to get the trade to break even, or as close to break even as possible. So you could roll it up. See, the ones with the tails are always a little bit stronger. So now, if the sellers try to knock the market down, well, you've effectively reduced your risk exposure somewhat. But if the buyers are going to maintain control of the market, well, they have to keep advancing, obviously. And if the sellers are going to take control, well, then they're going to have to step in fairly soon. So the market might get back up here to 59.90, 95, maybe even 60. And then if the sellers are serious, we're going to see some sort of reaction through there. But at least it looks like you'd be able to reduce your risk exposure by at least half. If you wanted, you could even go below the low of this bar, leaving you with maybe $100, $150 at risk. Okay, getting a trend change signal now. I'm not a fan of counter trend trades. I'm really not. But if this develops into a trend change signal, I will consider taking it. We don't have a signal yet. I'm only demonstrating. Here too, we're going to need to cover the risk or cover the trade above the swing high, because this is the most obvious place to say that we're wrong. Our stop strategy is going to be a little bit too ambiguous. If we get hit here, well, there's no way to say for sure that yes, we were definitely on the wrong side of the trade. However, if the market takes us out above the swing high, then we are definitely on the wrong side of the trade. Notice the Geiger counter dipping very sharply as we approach this support level here. We'll see if that gives us a little bit of a bounce back and generates a sell signal for us. So if I shoot a trend line across the NASDAQ, you can see we've breached the trend line to the downside. That doesn't necessarily mean the market will reverse. If I shoot a trend line across the top, you can see we're getting a little bit shallow. And I try to make my trend lines represent a channel, because very often prices will trade within a channel. Even if I shoot a trend line across the top here, you can see we're starting to get a little bit shallow here also. So maybe a clue that the market will give us this reversal signal after all. There is a little bit of room. We can trade back down to the hard edge. Jim's reminding me that we're sitting on our opening high, first half hour high, which may lend some support to the market. Joe says, which way do you want me to throw in my 10,000 contracts? All right, so here's the Falcon. Got the trend changed to the downside. The trend line has changed color. Here's the pullback move. Now looking for it to perhaps come back with a with trend signal. Real mess overall though. My goodness. Nicely done. Jim says the NQ just gave him a yellow bar sell buy. So here was a sell signal and he faded it. Yeah, we got another market that's going sideways, which it seems to like to do near the top of the hour. Wow, there they go. They're right back into that huge overnight gap. Just looking at the Raptor here, excuse me, looking at Jim's failure signal, we did get a whisk trend signal shortly after that. I wonder if that's how it's working out. I'll have to do a little bit of research on that later. Oops. Thanks, Jim. Jim just let me know that everything's come full circle. So we started the day with a negative 1,000 tick. Now we're positive 1,000 tick. What a crazy swing. All right, you guys, I think we're going to button up the room here in a moment. Overall, in spite of this recent rally, I'm still kind of bearish on the NQ. I've been waiting for it to perhaps turn over. Obviously, the market is in an uptrend at the moment, but we're back at some pretty significant resistance levels. You can see we're getting a macro pullback signal here. Our Raptor still channeling nicely, but still starting to shallow out a little bit here. I'm thinking that maybe, just maybe, we might see some sort of reversal. I'll stay with the trend as much as possible, but don't be surprised if the market actually makes a little bit of a pullback. Reminder that Wednesday we are going to be meeting in the public trading room, so don't come to this forum. Nobody will be here. All right, you guys. We'll talk to you later. See you tomorrow. Bye for now.